Today's weakness is quite violent, as compared to the other days where we did see some dips being bought into. Today's chart on the Nifty would tell you that at any point you sold, you would be making money, or at any point you bought, you would be losing money. It's a trending downward day, but at the low point, and some of these erstwhile wealth creators are actually coming off the highs and seeing, big shakeouts. Case in point, something like an Escorts Kubota, which is down about 5%. Indian Hotels, the stock was virtually at a record high every trading day over the last few trading sessions, and now that one's fallen by about 4.5% as well. Samvardhana Motherson down almost 3%. ACC down 3%. So we're seeing big cuts across the board, and the advanced decline ratio is actually telling you the story of the day. Over the last few trading sessions, we've seen some bounce from the lows in the market from the levels where we currently are at. So let's see whether we bounce back or whether we go ahead and see a more violent correction, because through the course of the day we've seen the advanced decline widen, and now the red line is much above the green line. But then let's talk about individual stocks. We have HCLTech meeting expectations of the analysts, and in the second quarter they've also raised their full-year growth guidance, whereas Wipro's second quarter is also largely in line with street expectations, but the stock is lower because the company expects the third quarter growth to remain modest. Rima joins in with the details on both those numbers, the divergent moves.
Thanks so much for that. Indeed, it's a tale of two cities today, very divergent moves. So let me start with HCLTech, which is doing very well. This is on the back of a strong Q2 where there was a margin beat. Top line growth at 3.8% in line, but margin expansion of 100 basis points surpassed street expectations. The deal wins for the company were strong. Deal wins, the net new deal wins went up by 16% on a quarter-on-quarter basis, allaying concerns in the street that the volatile macro environment will result in some slowdown in deals. So that's not happened. In fact, the management in the conference call also indicated that the overall deal pipeline is 20 to 30% higher than the previous week. Look at the hiring numbers for HCL Technology. It stands out compared to the likes of TCS as well as Wipro, where there has been a moderation in hiring. For HCLTech, hiring is pretty much in line with what they've done in the last couple of quarters, so no slowdown there. But the biggest positive surprise was the revenue guidance upgrade. They're now expecting revenues for this year to be in a range of 13.5% to 14.5%. This came in as a positive surprise. The margin guidance band has been tightened, but it doesn't come in as a surprise. Let me talk about Wipro as well. Well, Q2 was in line with expectations. The constant currency revenue growth 4.1%, a very marginal expansion of about 16 basis points on the margins, but the miss was on the guidance. Q3 guidance at 0.5 to 2% was lower than street expectations. Hiring for the company was also muted. Deal wins have dropped on a quarter-on-quarter basis. $0.7 billion in this quarter versus $1.1 billion in the prior quarter. And even the recovery of margins from these levels, the outlook of that is not very clear. Brokerages have brought down their EPS estimates, and that's weighing on the stock today. Back to you.
Okay, all right, Rima. Thanks very much for that. So that's in the entire IT space.